Inflation just cooled to 2.4% year over year, and mortgage rates this morning are opening down 6.10, down from last week's 6.17. And the bigger story this week is not the numbers. It's what the market could expect next. So let's dive into it. As this week was action packed from both sides of the economy, jobs to inflation, and we got a little bit of everything in between. So we'll start with jobs. Wednesday, we received the delayed January jobs report, non-farm payrolls, BLS, Bureau of Labor and Statistics jobs report, and there was a lot of anxiety, if you want to call it, walking into that report, as there was a percolating thought in the media cycles that that labor report was going to be weak. We were going to see deterioration in the labor market, and it was going to be ugly. Despite that, it was actually very strong. We saw 130,000 new jobs created versus the 70,000 that were expected, and unemployment moved from 4.4% to 4.3%. And surprisingly, in that, typically when we see a strong labor report like that, we could see some volatility downward, meaning rates deteriorating. And we saw the exact opposite. And there was a lead off into it on Tuesday where rates improved, and that improvement continued into Wednesday. Now, fast forward to today. Inflation. We got inflation this morning, and we saw both headline and core soften. And that was really kind of the catalyst in what we're seeing, a continued momentum forward with mortgage rates. And the big thing that the market has taken away from it is, hey, we got kind of balance, it appears, in the labor market and cooling inflation, which fundamentally is good for mortgage rates. And for the first time in a significant time, the thought that our consumers and our clients are facing right now is, hey, instead of rates may spike, we may find stability. And why that is important right now for our clients, especially as we're heading into the spring buying season, shifting that focus from, hey, I want to see rates bottom. But ultimately, if we continue in this kind of abnormal, kind of parabolic, crazy market movement as we've seen in markets past, it creates stagnation within our clients because of that overwhelming fear. The fact that we may be entering a more stable market just creates more ability to have more detailed conversations with our clients. So here, it's not about timing the market. It's not about identifying, hey, I want to buy at the lowest point when rates are. It's about creating stability and executing around a plan. Now, if you're thinking of buying, selling, having conversations around that, please know we are here. We are happy to help and would love to help create strategy going into this next cycle in the market. If you are wanting more updates, please subscribe to the channel, subscribe to the newsletter. We're here. We're happy to help. As always, let's make it a fantastic Friday and an even greater weekend.